So we have the structure of the market where we look at swing structure. We're going to look at internal structure here and within that swing structure. So when we're talking about swing structure, we can look at the bigger swings in the market. So when I mean large swing structure here, we zoom this chart out on this 4-hour time frame, and you can identify these larger swings in the market where we can see price has broken the downside, this last low, pull back, and potentially we're seeing the market continue another move lower. So understanding market structure in this way and how to map your charts, there is a great video I'll leave at the end of this video for you to go through and watch exactly how you can map your charts. But this is to teach you how to read structure just with that line chart. Now looking at these swing points, if I mark this out, okay, on a, make sure it's on a weekly, if we go to a weekly time frame here, and let's zoom back out, look at the line chart where we've mapped this chart. Okay, we can see that we have the same pattern, okay, with the line chart. So using multiple time frames with the line chart will help you to see these swings. So we're looking at the 4-hour time frame, but we can identify where we have that swinging pattern on the weekly time frame. So it's going with the actual 4-hour. We can see we've had a break of structure here. Most probably going to have an area of supply here where price is pulling back into now, and we're looking for a continuation to take out this week low. So that's how we look at market structure or break of structure with the line chart. Now, if I go back to the 4-hour time frame, when we look at the swings here, we can also identify, okay, within these swings here, okay, these moves down, this is the largest swing we're looking at. So we have, this is a larger swing, and there's a breakout, okay, broke this low, lower high, and now we're looking for a continuation to take out that week low. We just saw that on the weekly time frame. Now we can also identify the swing on the move here. We can see a break of structure here to downside. We have another break here. In fact, let me zoom in, make this a lot clearer when we're going through this. So reading these swings, okay, we have all this in here as well. This is still looking a bit messy on the chart, okay? So how can we clean this up? How would you clean this up? Let's go to a daily time frame. And let's have a look at these swings now on a daily. So let's go back to where we were. Okay, so now we can identify that we can see these moves within this area using line chart. Okay, let's forget about this move up. Let's just look at this move to downside. Okay, now we can identify quite quickly where we have these moves where we can see price goes up, we break structure. Okay, we do manipulate by this high, break structure. Okay, we have a small pullback there, continuation. Okay, so you can see how we can easily see this on the daily. That's why it's important to understand multiple time frames. So let's say we look at this low here to start with. We have a break of structure here to downside. We have another break of structure here. Then we have a break of structure here as well. Then we can move down and we have eventually another break of structure here. Now, the reason we have this break of structure because we really see this as a swing move down pullback. We have a minor break there, but we look at that as a full swing is this one here. You need to read those bigger swings. We have another break of structure here. And eventually we have a break of structure here to the upside. Oops, let's put that back. So look, that's how we can read very quickly with this line chart. So we can see we have a breakout here to downside, another break here, another break here, and we see the continuation of that structure. That's our break of structure, okay, line chart trading strategy. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. So if we now go to the 4-hour, let's just see if we've marked those lines out correctly. Okay, so we haven't actually marked them out. Let's go back. Let's just remove these ones. And let me just go back. What I meant to do here was actually mark these out so they were on the 4-hour as well. Obviously they're not on the 4-hour. No, for some reason they're not. So let's just change these quickly. We've already gone through the weekly, and we can see how the weekly helped us see the larger swings in the market. Then we've gone down to the daily, and now we can see that this weekly time frame was this swing here to downside. Okay, then we can see these swings here is that internal swing structure, okay, on the daily within that weekly swing. On a 4-hour time frame, we can see this when we come out of the chart. And we can see this movement here on the 4-hour. We now go inside here. We're also going to see on these moves, we can now just fine tune where these are. So we have a breaker structure there. We had a breaker structure there we marked out. We have another one there. Now we can identify that we obviously had this manipulation here. Okay, let's push up and then a fall down. We then have, let's mark these out. We had another breaker structure there we had on a daily. We had this breaker structure. This one's in the same place. And then we have this as our reversal. Okay, so even on these moves here, we can identify more swings. Now we class these as the fractal swing here, but we can also look at this as our major swing down, pull back, okay, break out, pull back, break out, pull back, okay, break out, pull back, break out. All right, we can see how the market's doing this move here, breaking that structure with a line chart. Now on the way back, we have these smaller swings in here. So zoom into the first bit. So here we have that breakout. We then create this small swing here where we see the market reverses. Okay, right here, we pull back up, we come back, and then we have the swing of the high, break a structure again, right there, and then we break back down lower. So here we know the market wants to then charge for this low. We then eventually break that low, we pull back, and again we can see that we break this structure here, come back to retest it, we then another break to the upside, and then eventually the market then comes back, we break out. So this is a quick breakout. We then had a breakout here lower, then we push back up one more time, okay, to take this high before we break this low. Let's have a look at what price looks like on the chart. So when we have price on the chart, reading the market like this, we can see the big break here to downside. Where we create that swing low, we pull back for that lower high. We can see the price action here. We have a nice bearish engulfing pin engulfing candle where we could take an entry, understanding this area, targeting this low, market hits that profit target. Okay, we then have this reversal down here. We can see again a nice pin engulfing candlestick to show us the bullish move. We push back up this high, pull back, make a higher low, and eventually we break this high. We wick through this high, okay, here, and then we drop through and break structure again. So it's reading the candlesticks with those line charts. We use the line chart first to quickly identify those areas. We're looking for those break structures. Again, here we can see the market breaks through. We create that pullback. A quicker look at price. We can identify here. We sweep this high on this candlestick. We then have an engulfing candlestick here. Okay, pin engulfing candle. Now you'll hear me say that pin engulfing very, very often. That you can sell on this candlestick. Bring that down. We can sell on this candlestick, targeting this weak low down here, or even this area marked on the actual line chart. Nearly 6-to-1 risk to reward. So a pretty good trade once you start to reprice. We break out again. Okay, you can see the internal structure here on the way down. Okay, we have a break, pullback, okay, continuation of internal structure. Then the market comes back higher and we break out again. So it's understanding reading these structures within these structure breaks. So again, every time price pulls back, we're going to do one of two things, okay, or one of three things. Price is either going to pull back to a swing high, okay, to look for that liquidity, or we're going to pull back to an area left over imbalance to look for that liquidity. Within these imbalance zones, there are leftover orders, or we're going to pull back to an area of supply, which on this occasion, we have the last buy to sell move here. Okay, the market didn't quite get to the actual area of supply. So you need to understand these three things is what gives you a potential trade. Up here, we see price decided to take out a swing high. And that's why we see the market creating that reversal that we've seen. Up here, we have the same thing. Price runs these actual swing highs and it actually runs this area of imbalance as well. So the market here, again, we can identify that we break this structure we've identified from that line chart. Okay, and the market actually continues down. We do leave here, okay, this last sort of buy to sell move before we break out. This is our true zone up here. And you can see the market does tag that zone and we drop off before we break to the upside. And eventually we see here where the market does make that breakout. Now this is where we saw the line chart breakout here. We've pushed up. The market's come back, made this higher low, and then we break out to the upside once again. That's where we see that full trend reversal shift there. So let's now just look at the line chart once again. To quickly identify these zones is just looking at the major swing. So there's a major swing, okay, pullback. Major swing, okay, there's a pullback, breakout. Okay, so all you're looking for in marking these out, again, from this high, there's a pullback, there's your continuation, that's your break of structure. You're just looking for those pullbacks. Even this area here, that's a pullback continuation, it's a strong continuation. That's valid. Here we have a pullback continuation, and then eventually we see the break to the downside. So we see the full reversal. Now looking at this, I would actually look at this as more of a full swing down and then a swing up. So that's one big move with a new breakout to the upside. Now we're looking at daily, this will probably look a lot more clear. So we'll just go to daily structure quickly. And there it is. We can see these structures a lot easier than we would on the 4 hour. But you can so easy, you can still see these on the 4 hour. There's that breakout, 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 breakout. You can see all these structures are easy to see and mark on this time frame. And even here, you can see we do have a small breakout there, which we're not really going to consider that as a area. We did have one here, but this one looks more of a push down, push up. Again, price would show you that on the chart. But that's how you can quickly and easily identify those areas by just going to a different time frame. But on the 4 hour time frame, which is one of my time frames of choice, this is where you can start to look for the entries, understanding those areas we want to take a buy off. On this occasion will be off areas of demand, areas of imbalances, all those swing lows in the market. So we just put price back on the chart. Let's go back to this area. We see the reversal. Yes, this is in hindsight. Many people will be saying, this is in hindsight. This is in hindsight. Yes, but this is the best way to show you quickly how to do it. So we're looking first for the areas of demand. So we have an area of demand here. We see price pull back into it and broke away. We then have a breakout. This is another origin area of demand here. Okay, price comes back into it quite a few occasions. We have another breakout. We have another origin area of demand here. We don't come back. We have this as another breakout. So we have a new origin area of demand here. Okay, let's just mark out all those demand zones. Again, this is my, I'd say this was my area. I think there's a bullish candle in there. Then we have another breakout here. Okay, so the last sell to buy move would be here. And then eventually that gets removed. So now if we look at how price reacts here. So we already have this push into this area of demand. And then we break up. Now it looks like what happens here is price finds some area here. We didn't actually go deeper into that demand. Okay, but perhaps it came back and found something there. For me, there wouldn't be an entry based this time frame. Now on an internal structure, we can see that we shift structure here, breaking out this high, which does leave an area of demand that we could draw within this zone here. We expect market to come back to. Now, it does come back and we continue to go higher. Now, we also come back into this zone once again, and we can use this last test as an area we can look for the market to want to go deeper into. Okay, so that's taking out a swing low. Okay, so remember, we're looking for entries off demand zones, off the swing lows, okay, or off the areas of imbalance. And again, the market does go higher, fails to break out. What do? We come back again and we take the swing low. And that's how we end up getting this pin engulfing setup candle. And again, Like I said, these candles, you'll hear me say them over and over because they are the best setups, and we can look to target this high and continue further with the trade. So once again, price here does not come back to this area, okay, on the swing low or this area of demand. What we do come back into this time is this area of imbalance. This is what we class the leftover imbalance. The true imbalance is from this close of this candle to the open of this candle. But on this occasion, we can see this is the current imbalance, which is left over. Now we look for the imbalances to hold at the high, the 50% or the low of the zone on this bullish move. You can see price holds at the 50%, lovely on this area of imbalance. And we also take out a swing low where we have this sweep. And then we're looking for the pin engulfing. Let's go closer in. What do we see here? We have a perfect pin engulfing candlestick. See, these candlesticks will work time and time again. Now, if we're looking for that swing high first for your target, 3 to 1, then you let the trade run. So again, we have a next zone. We have an area of demand. Price didn't come back to this demand. What we actually did, we actually came back to the area of imbalance left over here. We then also swept this low, and we create this pin engulfing stick. So many people may call this a hammer, whatever it is you call it, but we can see we have this candle. I don't personally like the look of it because it hasn't got any body, but again, you can see it works and price does go up. So you'll be looking to take out the high first, just over 1 to 1 and let the trade run. Then we create an area of demand. Now this is the first time I think we've actually seen price come back to a demand zone here. We come into this demand zone, okay, react off it, and we go for the high. And eventually we break out and we see that reversal. Now we got all this information to start with though by going to the line chart to see where we can mark off these break points. All about that breaker structure area that we're looking to trade from. So finally, let's just look where the market does come up here, and we're going to create this major swing. This is going to be our breakout point. We can see we've just broken through. We can also identify within here, we have the other swinging pattern where we can see where break to downside. Okay, market pulls down, breakout. We made a new high there, and then we create this new breakout here. So we've got the move down, pull back, continuation. Again, if we went to a daily time frame, I'm pretty sure you'd see this better. Yep, so on a daily, we can identify there's that breakout, push down, okay? There's some more of internal area here. This is more of the pullback and then the continuation. So we do have that within this major swing, okay? So this is what we call the internal fractal swing within that internal structure. So here on the 4-hour time frame, let's now go back to price. Remember, we're looking to see if we have price coming off a swing high, area of imbalance, or a supply. So when you go to look for your areas to take a trade, those are the 3 points you need to be looking to mark up. So first, let's look at this first push down. We go from this high, that's our last buy to sell move. Okay, so that's going to be from this low. Price just about test it to the pip there. Now we also have within that area, we can mark up an area of imbalance, leftover imbalance sitting right there where price does go into it, and we can mark off this swing high. That's more of a push through, pull back. There's no pin engulfing candlestick there. We do get an engulfing candle there now. You can see that engulfs that candle on the pullback, and that could have been an entry that you could have taken. So lower high engulfing candle. The wick to downside is a little bit long, but we can see the market does run for those weak lows and just over 2 to 1 risk to reward. So there's that first area. We then break out again. When we break out, now we do have this as a full area. This would be a valid buy to sell move here. But what we can do, we can refine that area, okay, to the last bullish candle. This last bullish candle here from the swing high, which breaks this structure here to downside. We do pull back. What we create here is then some equal highs of liquidity where we expect market want to run. So the market pushes through that liquidity into our area of supply. Now we have no area here of a swing high because that's above price. We do have these swing highs run here, and we don't have an imbalance either. But you can see this time it reacts off this double swing high and this area of supply. So again, we have another breakout here. What do? This is current price. We mark up the last buy to sell move here. That's our area of potential supply. We then mark off our area of imbalance. This would be an area of imbalance we can mark off. We do also have another imbalance here where prices just reacted off. So the market has pulled back to an area of imbalance. We then have our swing highs. Okay, so we have a swing high here, which has already been run through. Then we have a smaller swing high we can mark off here. And what do we now have created right there? We have created a bearish pin engulfing. So understanding this structure now in the market, what do we expect? Well, we do expect the market want to run this low. You could potentially look for an entry off this candlestick, but let's just use the sell one, sorry, not the buy one. So you could look for a sell of this candlestick, but look at the risk to reward. Just over 1-to-1. The risk to reward is not great enough. So I would not look to take this trade. If this entry had happened up here and we was looking to take a trade off this area, let's say up here somewhere, and we have nearly 2-3-to-1 risk to reward. Again, I've done it. I've got the buy instead of the sell. Got the sell. Let's say we have a sell up here, same sort of signal. We have a 4-to-1, 3-to-1 risk to reward or something like that. That's a better setup to take. So always remember, you look at your risk to reward. Do not take anything under a 2-to-1 risk to reward. So that is how we can use the line chart. Okay, break structure, line chart trading strategy. Then you look for your break structures quickly, then go to your charts. You can then confirm it with price on the chart. You're then looking for those areas of supply, those areas of demand, there's imbalances and those swing highs and lows. Once you've done that, a simple way to look for an entry is just looking for that pin engulfing candlestick. This is a valid pin engulfing, and you could potentially see this run this week low. There's no reason why this couldn't do this. We swept this high, we fill this imbalance, and we could see a drop to the downside. But like I said, it's not in the best location. Back here, we saw some other trades we could have had like this on the way up. Let's have a look to see where we saw a nice looking candle here. We have at least a 2-to-1 risk towards the high, I believe there. And we had a lovely looking candle on the way down here somewhere. Well, one we had one here. Okay, nice one. And we did see one we were looking at. Where do we see that one? This one here, I believe it was. This is a nice pin engulfing. The pin engulfing is one of the best candlesticks that you can use when looking for these trades. We had another one here out of this area of imbalance, that pin engulfing. This was a pin engulfing. This was off an area of demand. And that's how you look at using the price action, these candlesticks with this type of strategy. And of course, if you want to join that free Telegram community, you can, because there's going to be a link that's popping up to do it right now.